All right, great. So can you hear me? Okay, so let's start off with the trade that I took on 4th of October, Wednesday. Okay, so I'm just gonna show you how I map out today, like as if I would be trading on this day itself. Okay, so on the daily time frame, I'm gonna look for any PD arrays that are of significance. All right, if I don't see any, I'm dropping down into the 1 hour time frame. Okay, and right here we have two down close candles, order block. Okay, and these two down close candles attacked the low right here. Therefore, when price reverses, these two down close candles become a bullish order block. So right here at this candle, we have a change in the state of delivery because this candle closed above the bullish order blocks open, right? So right at this candle close, the closing price of this candle, we had a change in state of delivery. So right here, I understand that the overall order flow it's bullish. All right. So heading down into the 15 minutes, I mark out Asia's high and lows, and then I marked out London's high and low. So from here you can see that Asia's high is taken, Asia's low is taken as well. Okay, and we have London lows left, and London lows was taken right here. So because we are in NFP and we are in Wednesday, um, typically you would expect seek and destroy profile. Okay, so for seek and destroy profile, once AM session takes out um, the Asia's high here, right? As you can see, London did not take out Asia's high. So once AM session took out Asia's high, it's I would say low probability, but it doesn't mean that you can't trade. So basically, I was looking for a retracement into this breaker here during the AM session because right here at 7:45, price is very near to this high here. So I wanted to see if there is any form of any willingness for price to break down lower. Okay, so jumping into the pin message here, I have marked out the continued encroachment of the 4-hour CB and also the buy side above, right, for this particular day. So I'm waiting for the candle closing of 10 o'clock because right at 10 o'clock there will be a new 4-hour candle. Okay, and if that candle before 10 o'clock is unable to close above the consequent encroachment of the 4-hour CB, it indicates that we are most probably going to get a retracement. And because it is just a retracement, I chose ES to be my market to trade in because ES is overall more bearish than Nasdaq. All right. So right here, back to the charts. So I have, remember, right? I have the 4-hour CE mapped out. H4. So I'm gonna fast forward to 10. Okay. So 10 would be right here. Right here. I just paused it because I want to mark out the quarterly theory. All right. So 9, 10:30. That's the main focus. 9:45, 9:22, and 9. Not 9, sorry, but 10:07. Okay. So right here we have equal highs up here. Okay, right before the start of Q3. This entire 4 quarters, it represents Q3 of AM session. Okay, so I I was looking at this high right here. Okay, let me just, yeah. So right here, why was I able to anticipate that it's gonna come lower first before higher? Because we have a news at 10. Okay, so I am anticipating that the 10 o'clock news is going to be distribution. Why? Because they are going to utilize the 9:30 opening sentiment to attack the highs here. So I mean, once you do this long enough, you will be able to anticipate and you will be able to think in terms of a um, market maker's mind. So let's say you're making the market as ICT usually likes to do so, right? Put it inside, I mean, stand in the perspective of a market maker. You want the opening bell, all right, to be bullish, running against what you anticipate it to go. So that is a very strong indication that you are most probably on site when you see that 9:30 to 9:45, you see price running into opposing your buyers. Okay, so right here, oops, oh man, I cleared the replay, but it's okay. Just gonna return. Okay, I'm not gonna use the replay button. Not too familiar with that. Okay, I'm just gonna read it as we go. This is Nasdaq now. Yes. Okay. Right. Right here. Okay. So based off of quarterly theory itself, you want to see Q2 present a manipulation. So at 9:30, price opens up and trades into this high here. So that is your Judas swing. Okay, can you trade this? Yes, you can. There is the entry right here. All right, and you can trade this if you are nimble enough. Okay, you are anticipating price to attack this high by 9:45. So 9:45 to 10, most probably it's going to be consolidation until the news driver hits the markets. Okay, so right here I already have it mapped out what I want to see preferably. Okay, it doesn't mean that it's going to happen, but this is what I prefer to see. Okay, and then because at 10 o'clock we don't have a candle. I mean, we don't have the 4 hours candle closing above the consequent encroachment right here, above this level here, 42.81. Right, so at 9:59 your candle closing price is right here. Okay, so way below that consequent encroachment. So from that point onwards, I knew that ES is going to drop into a discount level. So what is a discount? From the 5 minutes, you can mark out the projections, and we have basically reached into the fifth standard deviation. So between fourth and fifth standard deviation, usually we get to see retracements up to 50% of the current dealing range. Okay, so this 1 hour BC right here is below 50%. Okay, I believe it's below. Let me just check. Yes. So the 1 hour BC, gonna reverse back. Right here. The 1 hour BC is right here. Okay, so it's right below 50%, and it has a order block, and it has a breaker. So if you're smart money, you are gonna accumulate down here to ride it higher. So I'm basically trading the retracement down into a discount PD array. Okay, so in this case, in higher term context, they are using the news as a manipulation, but in lower time frames, you would see it as distribution. Okay, gonna gonna rewind back again. Okay, so right here, when news hits, okay, the price displaced below this low here. So this high is to be intact. Okay, you don't want to see price attack this high again. So where was my entry? My entry was at the 5 minutes fair value gap above this swing high here. All right. Initially, I think I have an entry right here. Okay, because I was thinking that maybe it wants to, you know, run it down with speed. But when this low is engineered, right, as you can see, relative equal lows here, and then it traded back up into the 5 minute CB here, I entered another position. Okay, let me just mark it out for you. Okay, so just basing off of this, you would see that this is your accumulation, manipulation, and then your distribution, and then in Q4 you get your continuation. Right, so right here, let's see, Yep. So exactly as I mentioned, if Q2 attacks the high first, then I think that would be the manipulation, which is why news will be distribution. News only has two functions. It's either a, I mean, from my point of view, it only has two functions. Okay, it's either a manipulation or distribution, and if a previous news driver or a previous event, like let's say market opening, it is a manipulation, then you expect the distribution to be the news driver and vice versa. Okay, so right here I at 9:42 I mentioned that YM, if YM is unable to make a higher high, then I am very likely on side with my analysis that ES is going to trade down into that 1 hour fair value gap inefficiency. Okay, so back to this chart here on 5 minutes. This will be your short entry into the 1 hour CB. Okay, within Q4. So the move must be completed before 10:30. That's how I that's how I gauge, and that's how I utilize um, Day's quarterly theory. I use the times for my entry and exits. Okay, it's not just entries. You can use it for your exits as well, and as your, I would say, like a timer for your analysis to play out. And if during that time frame, it doesn't play out, that means you're most probably in a consolidation market or your analysis is wrong. Okay. So right here, same thing. We have the two up close candles taking out buy side, and then when this candle closed below this two up close candle, you have your change in the state of delivery. And then this area, this down close candle here becomes your breaker, okay, which is also in the vicinity of 7:30 opening price. That's your true open for AM session. Okay, right here, that's the true open. As you can see, price came right back into that true open. The high of this candle was 4268.75. True open is 4268.75. Okay, it's very precise here. Right, so that was the trade idea right here. So right here, when this fair value gap forms, I mentioned that some of them might think that this is a long to take out the highs here because they look relatively equal, right? But you have to have context and narrative behind. So right here, this area here, right? Some might see this as a long entry. Okay, why am I able to anticipate this? It's because I used to be like one of those people. Okay, so over time, experience um, will forge you into filtering out which is the real market structure shifts. Okay, you have the fake moves and then you have the fake shifts as well. So you can't really trust the pattern, I would say, without context and narrative. Okay, so context and narrative is very important right here. Okay, so that would basically end up my trading for October 4th. So, with regards to this, is there anything that you are unclear of or need further clarifications? I'll look into the payment market on my chart and see again. Okay, good. So now let's move on to the next one, which would be non-farm payroll day itself. Okay, that day, I would say it's pretty tough, right? So it would be a nice study right here. So non-farm payrolls, um, let's see. I'll mark out the charts first, quarter by quarter. And then your 9 to 10:30. Okay. So right here, basically you can see that Asia's high and lows were swept during London. Okay. I believe I shared a demo trade right here on Nasdaq. Okay, during London session, but it's a demo trade. Okay, so having Asia's high and lows ran, and then having London's high ran. Okay, took out the London's high during the AM session right here. This is London's high. What did it leave? London's low. Okay, so during a seek and destroy profile, you expect London's high and lows to be taken out. So you get to see like a expanding cone. Okay, so obviously I wasn't trading right before that news. I came in right at about usually the same timing, 8:50, 9 o'clock. Okay, so basically right around this area here was what I saw. I saw that the price, it's a distribution lower. Okay, after taking out London's high, distributed low into London's low, you get an aggressive sell-off. But if you look carefully, you have your AM sessions right here. Okay, the AM session quarterly at 7:30, 9, and 10:30. Okay, split them up. So right here, this is basically accumulation. Okay, why? You see how they were building the liquidities above the swing highs? Before this drop right here, it did not take out any swing highs. Okay, even though it took out this high here, right, the London's high, that was basically the last high that it took before grinding down lower. So this itself is accumulation. Accumulation on which side? The buy side. Okay, and then it drops. Okay, so what time did it drop? It's between 7:30 to 9 o'clock. So that's Q2 of the AM session. So from here you can see that this is a good potential of a manipulation. So news on a higher time frames, this is manipulation. Okay, just like how it was before in Wednesday as well. The trade that I just reviewed just now, the 10 o'clock news was used as a manipulation on the higher time frames. Okay, so from here, what do I expect? I have the 15 minutes marked out, I think. 15 minutes. Yep, so I have this fair value gap here. Okay, and I have I think the 1 hour. Let me just check. Yep, the 1 hour. So both of these levels are basically inversions, or you can use them as BPRs. Okay, so right here, Let me just check what did I say on 6th of October. Right, so trading below this 15 minutes BPR is, I would favor sell side. Okay, because as you can see, it's supported right here, and it's also within a 1 hour on the block, bullish on the block. Okay, so this is a very good, I would say, support. Okay, so if price starts to trade below this BPR, I would focus on sell side. Okay, and at around 9:22, I'm anticipating something like this. Okay, so I think if you pay attention to Daye's um, account, you would understand that if Q1 is an expansion, you anticipate a stop hunt in Q3. Okay, a stop hunt in Q3, and then you would resume that expansion. So right here, I'm just going to highlight it gray for that 50 minutes BPR. Okay, so right here, I was looking for this low right here. Okay, this low is basically the 5 minutes fair value gap right here. Okay, I was anticipating that to be traded too, because based on the 3 averages, Nasdaq is refusing to make lower lows, and Dow Jones, it's the most bearish of them all, and then you have the ES, which is the middle child. Okay, so I'm anticipating ES to have some sort of a um, stronger bearish price action as compared to Nasdaq, which is why I shorted this fair value gap here in Q3. Okay, but right at this candle here, 9:51. Okay, I closed my trades at a loss. Okay, so basically I entered at this low of this CB here, and I closed my positions when this candle closed above the CB. Okay, so why is that so? Even though I was aiming for this low and then it eventually hits it, okay? Because it's already 9:51, we are in that ICT macro, okay? 9:50 to 10:10. During that macro, I want to see price pull towards my objective without any um, resistance. So basically a low resistance liquidity run. I don't want to see something like this, when it comes back up, deep retracements before attacking the final objective. So this is a example of a high resistance liquidity run. So my plan was, if if it's going to be high resistance liquidity runs, I will look for the next session. Not session, but the next quarter. And usually that should present a low resistance liquidity run. Okay, so right here, you can see that we are always attacking the sell stops. Okay, right here, and right here. Sell stops has been attacked many, many times, but it leaves the highs. Okay, so this is a form of accumulation as well. So Q1 you have expansion, Q2 you have the manipulation, and then your half, okay, like let's say 50% retracement, and then Q2 you have this slow grind down. So what are you anticipating in Q4? It's going to round the highs here. Okay, and right at this point here, okay, I'm going to show you the 3 charts. Okay, so right at this low here, this is a 5 minutes here. Dow Jones is making lower lows, Nasdaq is making higher highs, ES is making higher highs as well. Okay, so in my mind, I am expecting ES not to take out this low here. Okay, I don't want ES to take out this low here. Okay, and it's great to see that we have SMT here as well. Okay, on the 1 minute time frame, this was basically how it looks like. So you have SMT here as well, even on the lower time frames. Okay, can you see SMT low lows, higher lows, higher lows? All right, which is why I have the framework 2 for this trade here. Okay, right at around 9:54, I indicate that this is probably the last chance for the price to attack the buy side if it was to follow the overall higher time frame power 3. Okay, and when this low was created, okay, this swing low here was created, I basically moved my stop loss up here. Okay, because this I see it as a higher low SMT to Dow Jones, and I don't ever want it to come back again. And we are approaching the end of this quarter, which means I want to see low resistance liquidity runs to my objective. Okay, and if you draw a dealing range from this high to this low, at above 50%, you want to see parabolic price action if you are on site in a reversal profile. Okay, so right here, swing high to swing low, 50% right here. Once you see the price trades and starts to close above it convincingly, not something like that, okay, you want to see parabolic price actions to your objectives, okay, and basically right at this 10:30 candle took out the objective right here. Okay, I think it took out before, yeah, before 10:30. Okay, so this is how it framed the trade here, right? So right here at around 9:35, I mentioned that I was slowly leaning bullish. I mean leaning bearish. Why? Because price is respecting the consequent encroachment of the 15 minutes CB and as well as 50% of the current dealing range. So what is the current dealing range? The current dealing range is from this high to this low. Okay, this is the current dealing range. And if you use the fibs, right, and you map out that high to low, -4. So usually when price trades into -4 and 5, this range here, okay, it tends to reverse back into the 50% level of the current dealing range, as I've mentioned before as well. So this is what we got, right? And price was respecting that area, which is why I was shifting my bias to being bearish right at the 9:30, right after 9:30 opening. Okay, because I was anticipating it to trade higher. I wanted to see 9:30 run against my bias. Okay, but it took out this high before running down. So in my mind, okay, short-term objective, I can trade this down into that 5 minutes fair value gap. But it turns out it wasn't that smooth of a trade. Okay, so because if I would have traded this, I would have waited, right? So let's say if I want to wait, okay, I want to trade through this high resistance liquidity runs, I would have waited, and then when price took out this low here, I would have shifted my stops above this high. Okay, and then right here, I would have been taken out as well. So this is a signature that I would always want to try and avoid. High resistance liquidity runs, and as well as it drains you a lot in terms of your mental capacity. Okay, and is there anything else to note? Right, so yeah, here are the two trades. Is there any questions? So next week, I think most probably we won't get a um, seek and destroy profile. Just like the how were you so sure that the price to be bullish just by that 1 hour bullish change instead of delivery? How were you so sure that it will be bullish just by? Okay, fourth, right here. Because when you look at Nasdaq, okay, compare it, compare and contrast Nasdaq. You look at the highs here for Nasdaq. Above this high is the weekly fair value gap. Okay, so because we are anticipating that Q1 is going to be a consolidation, I suppose this high is going to be attacked. And we are in Wednesday. Okay, price has been falling from Monday. I mean, based on S&P here, but Nasdaq has a consolidation. So Nasdaq was really not wanting to go lower. And in that case, when you have an asymmetrical market, you can tend to expect a deeper retracement. Okay, like for example on S&P here, you would tend to expect a deeper level retracement following Nasdaq. Right? So when Nasdaq came down to the lows and refused to take out this low, look at how far ES has went. So right here you have SMT. Higher lows, lower lows. And then you have your 1 hour shift in market structure or your change in the state of delivery. So we are most probably going to take out this high here. Okay. And when it takes out this high, it might want to overextend due to Nasdaq's drawn liquidity here. You have the magnet right here. Okay. It's attracting the price to come up here because it has induced players into the market thinking that the market is going to start going down, and then they have engineered these highs as well. So their stop loss are all going to be here. So let's say if you're a market maker, the only way you can pair huge orders would be above this highs here when you have accumulated a lot of buy stops. Right, makes sense? Which is why I anticipated that um, on Wednesday we are most probably going to be bullish, and I only want to trade into that discount. As you can see right here, Nasdaq did not reach into this level here. It just bumped this fair value gap and it went higher. Okay, so that was the answer to your question. Q1 first week seems to be yes. So Q1 seems to be consolidation. So let's say if you're bearish, you want price to, you know, provide you with a Judas swing, right? I believe this lows would be the monthly objective, but let's see. Okay, we still have a week to go, and on a 4-hour chart, you don't really want to see the price starts to trade above the consequent encroachment of this CB here. Okay, this CB right here for Nasdaq. For ES, I could care less because it's way more bearish. So as long as Nasdaq is willing to drop, ES is gonna drop lower. Okay, so S&P is not really of a concern. I just want to see how the Nasdaq trades in the second week of October. But if you're reading the news, if you're on the news, you would understand that we had a event just today. So let's see how the market opens. It will be quite interesting. All right, any more questions? Yes, so for Nasdaq here, okay, what I really want to see, right? I'll tell you, what I really want to see is next week, the weekly candle for next week, I want to see displacement away from this CB right here. Why is that so? Because we have a price candle, we have candle closing inside this current CB. So let's say on the lower time frames, same thing. I would expect the same thing. Once you see a candle closure inside that so-called bearish fair value gap that you anticipated to be your short entry, you don't want to see the next candle stay within the CB. That would be problematic. Okay. So for next week, I want to see price close below this high here, basically below 15060.75. Why do I have such a demanding um, condition? Because if you look at Nasdaq, it's rejecting lows. Can you see? Trades below this low here, rejects. You have quite deep retracements. Okay, comes back down again, trades below the low, unable to close below, and then rejects again. So this is problematic if you're bearish. All right, and it's taking sell stops many times. One, two, I mean like one and two, which is why I demand a lot next week. So any more views about GU and EU? Okay, for Forex, okay, best case scenario, right? Best case scenario is if DXY is able to trade down into this breaker, and then you see uh, a strong continuation, right? So right here, Q3, we had your distribution and your manipulation in Q3 itself. So I'm anticipating Q4 to be continuation, but before that continuation, I'm expecting some form of reversal. I mean, not reversal, but retracements. So personally looking at this breaker, and within this breaker, we have a small little weekly fair value gap. It doesn't mean it has to come down here. It can just remain bullish and then attack this swing high here. Okay, but my overall draw on liquidity is this swing high. Okay, once this high is attacked, I will have no bias for DXY in this current year itself. Okay, so if I'm anticipating DXY to remain bullish, obviously that would be bearish for EU and Euro dollar and British pound. So right here, I have marked out that the monthly CB for EU, I think it's going to reach down into this level here. And on a weekly time frame, we have a CB. Similar to DXY, we have a BC as well. And for EU, as you can see, it's pretty much balanced. Okay, you see this back and forth price action. You don't really have an inefficiency here, right? Except for this high right here, which I don't think it's going to trade to, but only time can tell. Okay, overall, I'm still bearish for EU, and for GU, let's see. Let's see if I marked out anything for GU. We have this swing low here, but first I would target this inefficiency again. Okay, because overall GU it's more bullish than EU, so it might just want to tag into this fair value gap and then resume higher prices. Okay, but if it breaks below this swing low here, I would lean bearish for British pound, because right here you see we have equal highs. The rejections are very good. We have huge wicks in GU and U. Still, why do we expect strong continuation to the downside? Huge wicks in GU and U. Expect a strong continuation downside. What kind of wicks are you referring to? These two? For EU, this one? I'm not too sure. But if you are looking at really long term, okay, for DXY, okay, okay. So in the case of your question, we're going to zoom out to higher time frames for DXY, okay? So from this last projection lower, -2 and 2.5 is right here. You have this equal highs here, okay? Traded back all the way to this bullish up close candles, bearish order block, broke lower into discount of this entire accumulation, and then you have your breaker as well. This is the breaker, low, high, lower low, closing above the high. So this is a breaker, and then you have a BC here, and then you look at the reaction of the BC, right? So which is why I am expecting continuation higher for DXY. And from this analysis itself, I am going to remain bearish for EU and GU. Make sense? Because for now, I believe that the dollar drives the markets. So I'm going to use dollar as a measurement across all other assets. So what will invalidate this idea, okay, is if price close below this BC here. Then maybe I would entertain the idea that it's going to come down to this equal lows. Okay, but so far it hasn't shown a willingness to close below this BC. Okay, and then again we have the two down close candles here. That would be a bullish order block, lining up nicely with the breaker on the lower time frames meaning the weekly time frame. Okay, that's your breaker. So based off of this entire price action here, dollar is in a bullish order flow. So until it presents evidence that it's shifting, I would remain in this bias. And also from here, could you picture a market maker buy model? Accumulation, reaccumulation, and you might get some sort of a distribution, and then your accumulation down here, reaccumulation, and then eventually trading below this low here. I mean eventually, okay? So can you picture it? Market maker buy model. Alright, so time is up. Right, I gotta end the session now. If you still have any more questions, you can leave it in the Telegram group. I'll review it and I'll try my best to answer them. Okay? Right, have a great weekend and look forward to next week. I'm gonna sign out now. Right, thanks for watching.